Okay, everyone, and please welcome to this special webinar that is hosted for especially our Webmetric app, and it is predicting tops and bottoms using Fibonacci tool. Myself, Bharat Junjunwala, and I am the founder of Webmetric.com, and I've done my technical analysis CMTC, FT, MSTA, and now I am trading and training full time in this market. So basically the agenda today is can we predict tops and bottoms in the stock markets, and this is the, the biggest mystery or question that everybody seems to ask themselves and again to their financial advisors or to the analysts whether it is possible to predict tops and bottoms. So before thinking and predicting tops and bottoms, we have to understand what tops and bottoms actually are. So let's move ahead. And this webinar or this session is exclusively on our Webmetric application, mobile application. And if you haven't downloaded it, of course you have downloaded it, that's why you're seeing it. And for the people who haven't downloaded it, please go right now in the Play Store or on the Apple Store and download it. This is the preview of what the app look like. So predicting tops and bottom, is it possible or not? Let's have a look into it. So what is tops and bottoms? What are tops and bottoms? Before predicting them, let us define them. So these are significant up and down moves, right? So it's not, I'm not here to predict absolute tops or absolute bottoms in the stock market. It's not like that. I am predicting this is Nifty is falling and here the Nifty will stop falling, and then you can buy stocks here and then it moves up and it will be a 10 bagger or 1000 bagger stocks. Not like that. It is defining tops and bottom within an ongoing trend. This is what is about tops and bottoms. So it is a significant down and up moves. What I mean by significant down and up moves is, suppose a stock is moving up and due to some news it moves down. So this down move can be a significant move in the stock. So when I'm talking about significant up and down moves, this is the significant down move, and then this can be defined as a top. All right. Now it can be highs and lows within a defined range. What do you mean by defined range? Suppose we are talking about an rectangle. So this is a defined range. The resistance and the support levels are defined, and any move that meanders between these, this is the top and this is the bottom. This is the top and similarly this is the bottom. So we are concerned about this top and bottom. We are concerned about this type of top and bottom. And also it can be defined as highs and lows within a defined trend. That means we have an ongoing trend. Now this can be defined as a top. This can be defined as a bottom. This can be defined as a top. This can be defined as a bottom. It is a high and low within an ongoing trend. The trend is going up and these are the relative high and lows. All right. So it is clear for all of us right now that we are not going to define the ultimate top or ultimate bottom, but we are talking about relative tops or bottom or immediate tops or bottoms, as we say, so that it gives us a good trading opportunity in the markets. So there are things that should be taken into account. First, it can be in all time frames, whatever time frame you are trading, from 1 minute to a monthly time frame. This tops and bottom appears in all time frame. Suppose when you are trading this tops and bottom things, you may be trading against the trend, so you need to be cautious, right? That's very short-term trades for say 2 to 5 days, and it can be against the main trend, just a swing type of trade. So you need to be very cautious, and you need to be proactive in managing your trade. As I told you, trade should be held for subsequent candles. That means from 2 to 5 days or 2 to 5 period, whatever you are using, any time frame. And you should be aware of some things that market can play against you for days, right? When you are going against the trend, you should be ready for market to play against you, because these are high risk and reward trade setups, and then you can see that market can play against you for some days. Profit will accrue slowly. Yes, of course, when the markets are playing against you for some days, profit are going to accrue slowly. There is no doubt about it. And then you need a good capitalized. This is because that means that if you are going short against the trend, and if you are going to hold your trade for certain periods of time, if you are doing intraday, then there is no problem. But if you are carrying your positions overnight, then you need to be adequately capitalized to meet the margin requirements. Multiple entries will be needed, and also multiple entries will be needed at different levels. So you need to get a good capital, say, to trade at least in 3 or 4 lots in any stocks or index. So you need that type of capital, and we may exit also at multiple levels. So this is the modulus operandi that we will use while we will trade in this type of trend. So let us see, there are few tools that may be utilized for forecasting tops and bottoms. So there are many tools. Trend lines are there, pitchfork is there, Bollinger Band is there, oscillators are there, Fibonacci measures are there, candlestick and volume patterns are there. So today we are going to see only this one, that is the Fibonacci measures, and these other tools maybe we will do in later in some sessions, or maybe you can go and find it yourself how these tools work. But you have to use all these tools, right, to forecast tops and bottoms, and these are very effective tools, especially volume patterns, oscillators, and Bollinger Bands. So these tools are very effective to get tops and bottoms in place. So this is one thing. So let us go. So 3 ways to use the Fibonacci. We can use the Fibonacci in 3 ways, right? First, we can use it for retracements. We will see in the following slides. Then we will use it for projections, and then we will use it for extensions. So these are the 3 ways in which Fibonacci is used. Generally, retracements and projections are the ones that people are using it more in the stock market. Extensions is still not very famous. So we will see, we will have a look at all 3 of them, and we'll see how these are done. So what are Fibonacci retracements? Fibonacci retracement is a very popular tool, as I told you, and it is used very extensively and among technical traders, right? And this was identified by Leonardo Fibonacci. You can go and read it about this man on the Google or anywhere you want. And Fibonacci sequence of number is not as important as the mathematical relationship expresses ratio between the number in the series, right? So we have Fibonacci numbers. You can go and read this intro anywhere, right, on the YouTube or on the internet. We are not going to waste time on this. We'll just jump on to the practical things that will be more help for you. So now, in technical analysis, Fibonacci retracement is created by taking 2 extremes points, usually a major peak or trough. As I told you, we will take swing highs and lows on the stock chart and dividing the vertical distance by the key Fibonacci ratios. Now these are the key Fibonacci ratios that we are using. We will be using this 23.6, 38.2, 50% is not a Fibonacci ratio, but again it is a Dow number, because Dow also focused on 50% and also a very important GAN number. So we use 50%, 61.8% and 78.6%, and occasionally we also use 70.7%. Now this 70.7% is a very effective ratio that works in the Indian markets. Why, I don't know, but it works very well in the Indian markets. So what is Fibonacci? Now we have to see how we can use Fibonacci retracements. So we are taking one leg of this vertical move, the low and the high. We take the Fibonacci tool, we select the low here, we drag it to the high and leave the tool here. So we get some horizontal lines on the charts that divides this vertical moves into some ratios. So this is the 23.6 ratio percent of this move, this whole move. This is 38.2% of the whole move, these levels. And then this level is the 50% of the whole move. And then this level is the 61.8% of the whole move. And this level is the 78.6% of the whole move. So the whole move here is divided into some percentage. So this is retracement. And now you can see how well this supports the price. So it has supported the price at 38.2%, and maybe in upcoming days we may see some movement up. So this is Fibonacci retracement. Now let's move again forward. Fibonacci extensions are used in Fibonacci retracement to predict spaces of resistance and support in the market. Extensions involve all level drawn past basic 100% level. They are frequently used to traders to determine the areas where we make the profit of fraction and ratio. Okay, now suppose in the in extensions, that is most rarely used, when a retracement that is in the last slide, if you see, when the retracement moves beyond, suppose this is the retracement, and this retracement we are trying to catch it at 78.6% is the last one, right? Now the prices are moving up and we draw our Fibonacci retracements here and we get different levels. Now if the price is not holding 23.8%, the price is not holding 61.8%, the price is not holding 78.6%, and the price moves beyond 100%, right? So this was the initial point where we took up Fibonacci and we left it here. Now somehow the price didn't retrace and it moved beyond 100%. Now where this will stop, that we will determine by using the extensions. And it is the same tool that we use in the extensions, and we use these ratios. For extension we use 121, 127.1, 138.2, 161.8 and occasionally 223.6 and 141.4. Again, this 141.4 is a very peculiar number that is very rarely used, but in Indian markets it works very well. So let us see what Fibonacci extensions are. So this is what I was talking about. Now when we took retracement from this lows to this high, and we see that the price fall hasn't ended or hasn't stopped on the 23%, on 28%, on 50%, on 61% and on 178.6%. The price move, the fall hasn't stopped on these levels. Instead, it crosses beyond the 100% level. That is the initial Fibonacci level that we have chosen for drawing that this Fibonacci retracement, and somehow it breaks it. Now we have to determine where the price will stop beyond this swing. So we take these three measures and we see that and we see that price has taken support at 121.7% and moved up. Again, the price took support at 138.2% and moved up. So these measures, these extensions are used as support and resistance level once the prices moves beyond 100% of the Fibonacci retracement that we have chosen. All right, it is the same tool as Fibonacci retracements. You have to just select these ratios that are beyond 100%, and then you will get lines on your charts that will be the beyond the initial swing, and then we can use these as support levels to trade for 2 to 5 bars setup. All right. Then projection, it is also one of the most commonly used thing. This is when we see support and resistance beyond 100% or beyond the tool, beyond 100%. Now, where the retracement will travel, where can the retracement travel after taking support on the ratios on the upside? This is uh, determined by this Fibonacci projections. How, just suppose here we have this moving up, and now this is 38.3%. The price took support on 38%. Now where this bounce move? We're talking about this bounce. Where this bounce will end, or where this bounce is supposed to have resistance or support, that will be determined by Fibonacci projections. Okay. So again, the common ratios are 100%, 161.8%, 200%, 261.8%, and we have occasionally used this, and there is a rare case of this, 423.6%. So we have to determine, again, you see one thing, that these are all beyond 100%, right? So we have to take these ratios once this swing is crossed, then we use these ratios. So it will tell us where the price can meet resistance on the upside. All right, let us look at an example. Now suppose this was the ratio and this was a retracement. We took the retracement here, and suppose this is 38.3% retracement. Okay, now we take the projection tool, we take from the initial retracement point to this, and then we take, then we choose this swing and leave the tool, then it will give us this. Now 161.8% projection levels, we got 161.8% projection levels, and then from there the price retraced back. All right, so this is basically an ABC, A, B and C. We are measuring these three swings. We take the tool from here, we drag it down, we drag it up, click here, and then we again click here and leave the tool, then we get this projection level, and you can see how beautifully it has retraced from 61.8% projection levels. All right, so this is all about the projection thing that we are talking about. Now let's put everything together and we will see a example in Nifty. Okay, so first we get a swing here and we draw an extension to determine where can be the probable resistance. So we get a 200 resistance at 95.9535 levels. We get one resistance here. Then we again take another projection tool from point A. we take it to point B and leave it at point C, and we get another projection. Now this is projection. We are getting the projection in the same zone. We are getting the projection in the same zone. All right. So we see that these levels are quite indicative that Nifty may face resistance at these levels. We're getting a projection at this zone. Now again we move forward, and again we get another projection from a different level. We have used this one from here, and we get another projection here from here, these levels, and when we see that these levels are also acting as resistance in the Nifty, we get multiple resistance here using projections and extensions. Retracement cannot be used since we are trying to predict. Now see what happened after it. Nifty went to these levels, took resistance here, and came down drastically from there. Okay, 150 points moved down in the Nifty. So this resistance level was already predetermined by you by using only simple Fibonacci. Right? There are more things that should be used at these levels that we are not discussing it right now, so that we get a very high probability of getting tops here. So now we get these levels here. So this is a way that you can determine the tops that are also before it happens. Now as we move forward, we see a support cluster here. Now let's see where we can find a support. So this is the continuation of the previous chart. We take A, B, C projection, and this is the 100% projection. So we see the price stopping here and bouncing. So this is the projection cluster. Then we move forward, and then we use an extension from this swing to this swing. We see 127.2% giving support to this fall. So we may see, or we may presume that the fall may stop here, or it may not go any further. And again we have multiple retracement levels from different swings. So we see again 50% and 23.6% of 2 time cycles coming here and clustering to give support to the markets. So we have retracements, so what we did projection here first, we got one level, we did extension, we got another level, and then we did retracement, and we got some multiple levels. So these level is becoming a very strong support level for Nifty, and we can assume that Nifty may stop here, and from here the Nifty may move up again. All right. So this is how we are predicting Nifty. The extension is predicted. Now we will see probable targets for Nifty. So first we use a projection from this swing. We take and we see that the price have started moving up from this level. So we take this swing and project it. We get some multiple levels here. We keep these levels. Then we again take a bigger projection, that is a bigger cycle. We take and project it here. Again we get some multiple levels. We keep them. Now we take extension of the swing. That is the latest swing as we have seen it. We get multiple levels. We keep it. and then finally we get a cluster of projections and retracements and extensions, sorry. So this is a cluster. Now we can assume that Nifty may come to these points before going down again. So you should try it yourself now in the market, and just let us see whether what happened in Nifty. Did it happen really? I'm just taking the same chart that I have taken. Now, this was the, if you can recall, this was the cluster we were talking about here, but the price didn't halted here. It moved up and came down again. So we have to see whether it was a cluster or not, or whether it was a proper projection or not. So I'm just taking the projection level, and I saw that yes, it is an 100% projection level here. Now we will take the whole swing and we will see whether our targets are met or not. So there we go. We see that we are near 127.2 or 138.2 levels. Now we haven't closed above it. Once we get a close above these levels, we can aim for 9664 levels. Until and unless we don't get a close above it, we're not aiming for any higher levels here. Now we have to predetermine our support levels that may, or basically the retracement level that we may get. So we take one line from here, and we're getting only one swing here. So we have to wait and see at which levels does Nifty come down and bounce back. Once we get these levels again, or level, we will mark some projection and extensions again and see whether Nifty moves up or not, and if yes, in which ratio and up till when. So if we take this projection target as of now, we will see that we are almost near a resistance at Nifty. This is the latest chart. You will see we are at resistance at a Nifty, and unless and until Nifty manages to close above this, if it closes above this level, 2 or 3 closes above this level, then we can target 9658, not before that. If it fails and if we get a price action of some candle, some bearish candle like this, then we will use our retracement tool. We will draw a retracement here, and then we will see whether at which level Nifty stops. We have to confirm it with our price action thing also, and we have to see at which level Nifty stops, and from here where it moves. So right now we are at an resistance here shown by extension levels, extension tools. We will have to wait and see whether Nifty behaves at this point. So this is it. You give it a try yourself, and then see how it works for you. And also, our Webmetric app that will keep you updated with the Nifty trade, and will keep you updated with everything. Right? You can go to the knowledge base section on the blog, on the app, and get these type of insights. There are many programs that are upcoming for the mobile Webmetric app only. So hope you have enjoyed this session, and do share it with your friends and relatives the benefit of this app, and I'll be up with a new session soon, and let's see how Nifty behaves in today's session. Bye bye.